Catherine Allfrey, welcome to the Equities and Growth Assets Symposium. Can you tell us a bit about your key differentiating points as an approach to equities?
Okay, I'd say in terms of WaveStone, it starts with the people. We have a team of 8 people, which is quite a small team, but we have 4 nationalities in that team. We have obviously women in the team. And so I would say that we actually have quite a diverse team, and that's really important. We also have an experienced team. The 2 PMs, myself and Raz, have 20 plus years experience in the Australian stock market, and I think that's a key differentiator. In terms of our process, we have a qualitative filter up front, not a quantitative filter up front. And that's really important in terms of filtering out the quality stocks. So that would be our 2 key differentiators.
Now, the concept of the sustainable competitive advantage is key to your operations. Can you explain that concept?
Well, that's the qualitative filter that I was just talking about. So that's actually 15 factors that we as the analyst team look at. We divide those factors, those 15 factors, into 7 that just look at the company and 8 which look at the industry in which that company operates in. The 7 factors that are the company are things like what is the company's approach to research and development, what is its track record, does it have superior operating margins in the industry in which it operates in, and then we look at the industry factors such as pricing power, barriers to entry to that industry, what's the government policy that regulates that industry. And so we tick off those different factors and give the company a quality score. And the minimum that they need to get is 6, and then from then up to obviously 15. So we find that we get low, medium and high quality companies, and that's our first filter before we go on to valuation.
What about your investment universe? Can you speak to that for a moment?
So we're a broad cap manager. We invest in anything above market cap of $200 million. And so we invest in large caps, mid caps and small caps. Predominantly, we own usually 20 to 25 of the top 100, and then anything from sort of 10 to 15 stocks in the X100.
And what about your approach to ESG?
We take that extremely seriously. We write a ESG quarterly report. Our process being sustainable competitive advantage, which we actually started WaveStone in 2006. And so sustainability has always been something that we've focused on for companies. And so we don't have a sustainable fund. It is what it is in terms of the fund at WaveStone. So we have a regular investee company meeting schedule. We meet with the chairs, NEDs of companies. Of course, we meet with management as well. And because of the experience, particularly that Raz and I have, we're never afraid to ask a hard question. So our super fund clients are always pressing us to ask those tricky questions of management or boards to get those issues discussed. And so, a recent example was Rio. We had the CEO in post, the sexual harassment claims, and we spent most of the meeting, 45 minutes of an hour meeting with the CEO of Rio, discussing exactly that.
Now, you run a long and a short book. What do you see as both the greatest opportunities and risks in the Australian market?
Yeah, right. Well, at the moment, it's interesting because Australia is the lucky country, right? We've, benefited from the unfortunate situation of the Ukraine invasion in terms of commodity prices have gone through the roof, and clearly Australian economy benefits from LNG and coal, for example, going up in terms of the prices. But globally, the world is a very, tricky place in terms of geopolitically, but also with rising rates and liquidity being sucked out of the market. And so from a valuation perspective, that's what you're seeing in terms of those valuations of the market coming back. But from an Australian perspective, when we go out and do all our company liaison, it's quite positive about the outlook for Australia. So it's sort of quite a tricky market at the moment because anything that's global facing is finding it much, much tougher. Anything in Australia at the moment is not too bad. The question is what happens in 2023.
Could you expand on your 2 highest conviction ideas?
So we're going to talk at the conference about ResMed and Qantas. These are 2 companies that have actually benefited in terms of the step change in competitive advantage during the COVID period over the last couple of years. So in Qantas's case, clearly they've been to hell and back, and they're now in that sort of reopening recovery stage. 80% of the profits of Qantas are domestic, and we've seen a surge, particularly in the last 7 weeks, around the Easter period on in Australia, in terms of Australians travelling again. So, Qantas obviously just recently upgraded their profit guidance and blew the market away in terms of their numbers. And so we think that there's going to be a strong recovery from Qantas. conference. And so we bought those shares below $5, and the stock's done particularly well recently. But that's one that we think that will have a huge bounce, but we'll talk about that more at the conference. The second one is ResMed. More recently, that one has been hit hard because one of its major competitors, Philips, has had a problem supplying the market in terms of a recall of its product, and ResMed itself has recently downgraded its results expectation for this year because it can't get componentry. That's a short-term issue we see. And so even though that issue is obviously hitting them now, we think the long-term trajectory for sleep apnea globally is very, very strong. And so from a long-term perspective, we still think that ResMed can perform well, but we'll speak more about it at the conference. So they're two stocks that we really like at the moment.
Catherine, thank you very much.
You're welcome.